Again, similar to yesterday, I'm sorry I got cut off by a phone call and I don't want to merge the video, so they're just going to be in two separate videos again. And continuing where we left off in the last video, I believe we were talking about AMP here and about AMP, how it's been slow and steady. And I remember what we were talking about. It took from the peak in March of 24 to make its second peak after the long consolidation and giving it all back. It took till December. So it took about 9 months. So then you look where we're at now. December, January, February, March, April, May, June, July, August. So September would be an area where you would look for your next high. So September, that's only a month and a half away. What should happen in between now and then is the bottoming out phase, which right here in August of 24 looks to be about what this was. And if we look, we don't care about that. If we look here, this was December and this was April. January, February, March, April, 4 months. This was March, and this was August. April, May, June, July, August, 5 months. See some similarities there? Then you had a similar double bottom on the support level, and now the rally. I think we're starting in our track. We should have put more emphasis on our track, our algorithm, because it's been dead on XLM. It's been dead on XRP. I should have just weighted it more with the track, but you can see it said right here, we had to wait longer, and then we would start rounding the bottom in the summertime, and that's exactly what we're doing. And look where the track says it goes after, 2.5 to 5 cents, right? And I'm thinking at least on this next run up, we're coming up here by August. I think we're going to come up to at least 0.008. I think we're going to have a big move all the way up to this upper resistance. I think we have a 2x move coming. And then eventually, I think we're going breaking out of this formation and coming to the 2 to 5 cents. Does that mean it has to happen? No. But I see enough small similarities here with the amount of time it took from top consolidation to top to the time it took from top to bottom, the amount of time the consolidation took. All very similar. I think this is very bullish, and that's why I did purchase another $900 a few days ago, because I believe we're in the midst of a big, finally a wake up, catapult, quick pump like AMP does, because they react quickly. Algo, one of my Jabroni Killer members, did buy off of this, what we talked about yesterday, when it got that textbook rejection right here, when it nipped in the first time. It was sitting down here yesterday about 22 cents. I think he said he bought. We said that's a textbook rejection. And if it goes bullish and breaks out, it's going to break through there. And then the next thing you're going to look at for it to do is to come all the way up to the 36 cents. If, when it comes in here, what it might do if it doesn't shoot straight up, it'll come back and back test this 24 cents and then continues up. If it doesn't just go straight through, it could just go straight through. Nobody knows. But on a textbook, it would come down somewhere around where the price is at now, somewhere up in here, and back test, hold it as support, similar to how this got rejected, textbook, and then pumped through, right? And then your next upper resistance is 36 cents. Your major lower support now is the 24 cents. You'd want to flip it, and that's what you're looking at support. XCN is the same thing. It continues to hold the moving averages, and we talked about it yesterday. As long as it holds the 14 cents, your next move up is coming all the way up to this upper resistance, this lighter purple trading or light red up there where it got rejected several times after it had its first dump down here. See this? After it had its first dump onto the 0.00795, came up to the 0.2812, rejection once, rejection twice, rejection 3 times, back to the next layer of underneath support, where it had several areas that it confirmed hit on the 200-day and the 14 cents. As long as it holds that, your next upper target is that 0.022. If it can't hold this and starts to trade down and slips the 0.014, you're looking at the 200-day moving average as your major bullish and bearish signal. As long as you can manage to stay above the 200-day, you're bullish. If you can't and you slip below it, you're bearish. But right now, you're very bullish like the rest of the market. XDC is the same thing. You're on top of the moving averages. You're about to have a bullish cross where the 50 is going to reclaim the 100-day. Come on. In probably a few days, unless there's a big correction. Then in about a week's time frame, maybe less, 3 to 6 days, you would have the 50 crossing both of these in a golden bullish cross if the price continues to hold up. And if it continues to hold above these moving averages, you're bullish. And we do know your next upper resistance is up here between the 0.09 and the 0.10. As long as you stay above these three moving averages, the 200 and or the 200 and the 100, you're bullish. If you get below the 200 and 100, obviously, then you might want to come back down to that head and shoulders target that we almost came down to. Well, on the wick, we actually did come down to it. I just thought the candle body had to come down to it, but maybe it doesn't. But right now in the short term, what you want to watch is stay above these two moving average in your short term bullish, and you can continue up to maybe go up near that 0.010 cents. The similar thing, just like we talked about yesterday with the XDC, it was sitting just below the 0.008. Now we fired above that. We've gotten to the 100-day moving average. Now if we can fire and hold the 0.008 as support, we can fire over the 200-day moving average. And if you do get over the 200-day moving average, you would quickly rise and come up very quickly to the 0.01 to the 0.010 level up here, because that's your first area of major upper resistance. Not only was the neckline over here of that head and shoulders that got us down to almost a 0.005 target, it got us down to the 0.008 from all the way up here. So that was like a 75 or 80% call that we made. Industry exclusive, first mover advantage. Support the channel, video description and/or pinned comment. Truth, trust, education, and information. Gave you the better buying opportunity from all the way up here. Gave you the chance down here and here to buy if this is in fact the bottom. And now we're going to move to the upside. But as long as you're above the 0.00840, that yellow line, you're bullish in the short term. And then you know the price can continue to appreciate and continue to take out some of these regional highs and try to push past that and maybe reclaim eventually the swing high of 0.0239, an area that had a double bottom that maybe was sort of like a cup and handle. And if it ever does break out of that, the upper target is 0.08967, approaching the old all-time high. And maybe this was the macro move, the long-term move. The cup started, the rejection, you see that, the neckline, and then this is the handle, right? And this would be the technical target on a cup and handle breakout. Maybe that's what we're looking at in the DGB. And that's something that maybe this was just what we needed to do here off the correction on DGB, was the head and shoulders, was just the correction to form the handle that we needed in order to form the eventual breakout. So that's something that's very interesting that I'm going to follow for the next several months, the same way as you can see the H-bar. After we called the correction double top correction, now we've had the double bottom correction, and now we're swinging up. And it looks to be, if H-bar can continue to the upside, you're coming up to its first major resistance, which is where this neckline was at 0.28. And then the overhead major is obviously the regional swing high of 34 cents. If you break the 34 cents, however, you could go up to $2.28, which is an all-time high, which is where you got rejected by this last pump up, was actually the all-time high area. So if you do break the all-time high, you're looking at $2 H-bar. Do I know that's going to happen? Absolutely not. Am I forecasting that? No. But that's something that I have on my chart because, I mean, look, stranger things are happening in the world of finances. You can see the H-bar volume has been one of them that has steadily risen all the way through, right? You can see the mean of the volume continues to rise, although we can see recently in 2025, it's come drastically down in the daily candle, and the mean has come off its peak and actually come down to the mean down here. So that is interesting. But these are all things we're going to be following this week. And like I was saying before we were cut off, the existential threat that could chop this rally down with textbook manipulation would be Trump coming back and implementing his tariffs to not only knock down the crypto, but it would knock down the stock market while pumping gold and silver and vital minerals, hard money, copper, nickel, all that would continue to pump as they're all at all-time highs, and platinum and palladium. Peace and love. We'll have another update later. The Rex Eyebrow.